out there is not familiar with the expression CBDC? That's good. Everyone knows what we're talking about. And who out there thinks that CBDCs are a great idea? Couple. Does anyone out there fear CBDCs? Do they think it's an absolutely terrible idea that should never be tried? Yeah, a couple of those too. All right, well, let's look at all of these issues. We've got some seasoned experts here. Like, some of these guys have been working on the CBDC concepts long before I'd even heard of the term. So the first thing I think we need to define is, what do we mean by CBDC? We know it means central bank digital currency, but what is that? Is it a retail currency? Or are we all going to have central bank wallets on our phones, and we have to use that instead of cash for all of our spending? Or is it going to be like a wholesale instrument that's only used in the background between countries? I guess the big question is, where should we start with all of this? So maybe Kumaraguru, I think you should tell us your definition of a CBDC.
Sure. For me, a central bank digital currency is a new form of money which essentially has the liability of the central bank. The central bank is the entity which is liable for this currency. So it could start with cash notes, it could start with bank deposits, and it could start with coins. So the essential thing about central bank digital currency is who's got the liability. If the central bank is the liable person, then that's a central bank digital currency. We already have wholesale CBDCs. If you ask the European Central Bank, they say we already have central bank digital currencies. What they essentially means is the interbanking transaction that uses central bank money. So my definition would be the liability. If the central bank holds the liability, it's a central bank digital currency. It could be digital cash or tokenized cash.
See, Chris, does that match your understanding of it?
Yes, I think it does. Certainly for the wholesale side, we're really talking about the new technology that allows banks to settle with each other, allows banks to settle with a central bank form of value. When it comes to the retail CBDC, I would look at it a little bit differently. I would say it's probably a third category of money. In the retail space, in people's hands at the moment, you have commercial bank money and you have cash. This is a third form of public digital money, a third form of public digital money called a CBDC, which exists in a new habitat. It exists in token form on permissioned or permissionless blockchains.
Okay then, and James.
Yeah, I don't have too much to add to those definitions. I think they're pretty on the money. Yeah, I guess the key thing is really kind of a lot of people sort of think in their heads that physical cash, digital banknotes directly from the central bank, a digitized form of that, which has some unique properties and opportunities to it, and can be held by all sorts of entities. So it's not just the commercial banks, which is currently how it operates with digital central bank money, but sort of a broader market, retail, businesses, and things like that. So that's kind of the way I think about it.
It sounds to me like conceptually, it's still very much a work in progress, and it's open for the people who are in the industry to define what it means and how it should be constructed. One other thing I was curious about is there actually a push to adopt CBDCs? Like, we hear that that this is something that central banks really want, that governments really want, and they're going to foist it upon everyone. But is that true? Like, who is actually leading the charge to work on CBDCs? Is it the central banks? Is it the governments? Or is it the credit card companies? Or is it something else entirely?
I think it would be use cases. So every jurisdiction has a different need for a CBDC. Say Bank of China has a different need. Reserve Bank of India has a different need, and probably Bank of India, Bank of England will have a different need. Let's start with Reserve Bank of India. See, one of the biggest issues with the Indian currency, they've been demonetizing their currency, their cash. What's happening is counterfeit currency has been coming from Pakistan, a state entity, and is being pushed into the Indian system. So they demonetized the cash, and now they're trying to secure the cash. Just a couple of weeks back, they demonetized the 2,000 rupee note. So here they have a complete use case for moving towards central bank digital currency. And now the issue comes with the design aspect of it. Okay, how do we design it? So should we have it like cash, or should we have it in a way that it resembles bank deposits? Do we have the commercial players involved, or should it be directly in a wallet which is authorized by the central bank? So I think it's the use case that's going to drive central bank digital currency. Each jurisdiction is going to have a different use case. One other big use case, I think, would be cross-border payments. When it comes to cross-border payments, 25% of the world's GDP cross-border payments is done via wholesale banking. Now, when an entity like ECB says they already have wholesale CBDC, now it's about how we can use technology like public blockchains or DLT to tokenize this asset and create a settlement layer that removes the settlement risk, so to say. So it's going to be driven by use case, and it's going to be different for different jurisdiction. China is going to have a different use case. India is going to have a different use case. The sand dollar is a different use case. I think it'll be use case driven.
That's interesting. Yes, I have heard of the sand dollars in the Bahamas, I think, and Jamaica's Jamdex. Are they true CBDCs?
So again, as I said, it all depends upon the design. So the unique thing with Bahamas and the sand dollars is they have different islands. The need to move cash from one island to the other is so heavy. The use case there was to have a digital system. Mm-hmm. So instead of literally carrying cash on boats from one island to the other, it makes sense for them to have a digital currency. It's all on the design principles. And what's the need for the central bank digital currency?
Yeah.
I think, John, to answer your question on what is pushing this, who wants this, I think you can probably go back to 2019 when David Marcus and Mark Zuckerberg said, we're going to create Libra, we're going to create the Facebook dollar. That's probably the moment in time you can say before and after. Before then, central banks weren't that interested generally in Bitcoin, in blockchain-based payment systems or anything like that. And after that, they became very interested in this. It was more that the Libra Diem system could have worked, not that it was so outlandish. It was actually that it was a plausible system for people all around the world to use a Facebook dollar to transact with each other on a completely different set of rails, completely out of the jurisdiction of the central banks. And since then, central banks have become more and more interested. But the pace is quite slow. It's a very different pace from the rest of the blockchain-based industry. The use cases are always fascinating to central banks: cross-border, remittances, payment between islands, all of those sorts of things. But there are so many policy issues touch CBDC discussions. As soon as you have the first conversation with the central bank, you've got everything on the table. The role of the dollar, privacy, anonymity, cybersecurity, every single thing you can imagine touches the discussion. And that inevitably, in a policy-making environment, makes it quite slow-paced.
It's indeed a complex machine, yeah. And just to touch on one of the points you made then about the Facebook Libra / Diem coin, what was it exactly that killed that concept? Because everyone got very excited about it for a while, and I think some members of Congress or some regulators pretty much put the kibosh on it.
The central banks ran to the hills. I mean, when they really saw what was happening, they were terrified. And I worked for a central bank think tank at that time, and this was, I think, the first time that the central banks realized they could face an existential crisis. So kind of a lot of the work you see them doing now, in some ways, is actually future-proofing their own currencies. I think Facebook as well hadn't spoken to central banks before. It's one thing to disrupt the taxi service with Uber. It's another thing to disrupt hotels with Airbnb. Disrupting money, disrupting sovereign value itself is a different thing. And if you're going to have as your motif move fast and break things, that's pretty much the worst thing you can say to central banks. And they made sure that every place where those guys tried to apply for a license in Switzerland or in the US, they were rejected. And then in the end, it fizzled out.
Yeah, because I have heard of a lot of public opposition to this idea, but then someone mentioned to me one day, no, actually most of the resistance to a CBDC is coming from the central banks, because they don't really want to do this. They don't want to change the very nature of the money they issue. So I think, is that a question that still maybe needs to be looked at?
It depends. I mean, I don't find that so much now. I think that's less and less true.
Right.
It's certainly true at the most senior echelons on the governor's desk. There might be, do we really need to do this? I've got capital controls to worry about. I've got inflation to worry about. Do we need to? But that's becoming less and less true. I think there is resistance from other places, but there's more eagerness, at least, to learn, to see if any of the problems that the current system presents can be overcome with this form of public digital money is of more and more interest to central banks. And they're doing more things, though very slowly.
To add to that, I think it's monetary sovereignty. Central banks do not want to lose the monetary sovereignty or even the supply of cash. So that's one thing which kick-started them researching on central bank digital currencies.
Yeah, so I agree with that one in a big way. So I think a really core motivation behind the policymakers, the influencers and lobbyists would be the sovereignty of their currency and more about the competitiveness of their nation and the marketability of their currency. And so technology has such an outsized impact on that in terms of friction, performance, cost, reliability, and it's so foundational in the business, right? So if all these jurisdictions are always competing, this is a really important arena to compete on. So.
Yeah, that's right. Now, James, at Tokenized, you just released your desktop application dashboard last week. And I was having a play around with that, and I noticed it said creation of a digital asset, and the drop-down said, I think, discount coupon, theatre ticket, and CBDC.
Yep.
I was kind of surprised to see that there. Have you had much interest in using the platform for that, or did you just put it there to remind people that it's possible?
So I think a core principle and part of our vision that we kind of held true at the beginning is that this future vision of a tokenized future and financial events and actions being on-chain needs to include all instruments, right? So the idea of smart contracts and atomic swaps and a higher degree of interoperability and automation requires that all instruments be interoperable and to the same sort of standard. So in our mind, sort of central bank digital currencies or just currencies in general need to be digitized and they need to be interoperable with everything else to really unlock the full value proposition. So we've been thinking about this for a long time in a first principles approach. We've written a lot on it, we've read a lot on it, we've kind of understood the concerns, we understood limitations, we really tried to figure out what the non-negotiables were and how this whole thing fits together and what it might look like. And so our system is basically ready to be used by a central bank. Have we got a central bank ready to use it yet? We do not. We are talking to some. We are exploring various different options and looking to do pilot projects and things. But that part of it is pretty mature in our platform. And it's just one piece of the puzzle. And it's something that we wanted to get out there now and communicate what we can do and our capabilities to start building trust, because these kind of things take a long time. These conversations will take years. So get it out early, start the process, and hopefully in the future we can start to make progress.
That's right, yeah. And Chris, I remember you saying before that we've seen, for many years now, we've seen pilot programs, we've seen like studies launched, tests, that kind of thing, proof of concepts. You said what you would really like to do is start getting tokens in people's hands.
Yeah, get something into a live field environment. I think that's probably the biggest blockage at the moment. I mean, every central bank has had an industry group, has had a research group, and I've sat on many of them and contributed to the papers. And the proof of concepts and the sandboxes that have come out have been quite instructive. When it comes to the retail side especially, I mean, if you particularly look at the retail side, it's very difficult sometimes to explain the before and after, because in some countries, such as in the UK, we have a very well-developed e-money payment system. So I thought, well, how's the CBDC going to help me? I can pay with my Google Wallet, I can pay with my Apple Wallet. So you're looking for that use case where the smart contract functionality, where the token-based nature of the CBDC allows you to do something with it that you couldn't do before. It could be micropayments, it could be payments for content, it could be machine-to-machine payments. And this is most in focus in the global south, in emerging market countries, where there's a large percentage of the population that do not have a bank account and don't have access to financial products. Token-based CBDC can provide things like microinsurance, very, very low-cost remittances, the sorts of access to borrowing and lending, which are completely out of the reach of many people at the moment. And you see this actually working quite successfully in some of the crypto spaces. You know, some of the NGOs like Oxfam, the World Food Programme, the Grameen Foundation, have used crypto-based stablecoins to disperse cash in a way that has really changed the lives of the end users who are not bank account holders, who may not even have a phone, but you can send the tokens to an NFC card. And in those environments, a central bank is very interested to see this, because they then think, well, okay, if we actually, instead of Oxfam using a stable coin, if they used our own currency, then there's a bit of sovereign currency there that's protecting us from dollarization and that allows the individuals to do things that they can't currently do. Then you get a very, interesting set of use cases, and they're the ones that at Soda we're really trying to focus on. Tokens in people's hands. There are other ways of doing it as well in Central and Eastern Europe, but I'll leave it there just to leave that in people's minds as well.
I'll just continue on that a little bit and say this is a question that any of you can answer, but if you and your company were granted godlike powers to design a central bank digital currency policy and and perhaps the application that people use to use it, what would it look like? Maybe Kuma, you could go first with that.
I think I'll start with deprecating the power of godlike, and we should probably have a discussion on privacy. We should have a discussion on accessibility. We should have a discussion on if it's going to be offline. Because the one thing when it comes to retail CBDCs, we talk about financial inclusion. But if you're going to have something internet-based, how is it going to be financially included? Is there offline payments? Then this topic is why we are having so much discussions around this is it's not a solved issue. Each jurisdiction is going to have a different use case, so it has to be designed as per that jurisdiction's use case. So first thing, say if a central bank is issuing a CBDC, do they then give it to the commercial bank and do the commercial banks distribute it? If not, if it's directly by the central bank, then what's the use of a commercial bank there? Then are the commercial banks going to be left out? Then if the central bank is directly issuing the CBDC, is it going to be interest-bearing? How is it going to be interest-bearing? Is it going to be a separate wallet? Who's going to be managing the wallet? What's the privacy behind that? What's the security behind that? So I would deprecate that godlike power and have proper discussions with all stakeholders involved to ensure we have the correct design principles in place. These are just what we know right now, and there are so many other things that we would probably see while we implement it. So discussion would be the right place to start with.
I do like a deity who consults with the stakeholders before making a judgment. That's quite sensible. James, did you have a vision of your own?
So, I mean, we've built it. So we have a vision and we built what we think it should be. Of course, it's flexible. Of course, it can accommodate different policy decisions and control measures. I think there are some things that are fundamentally different between physical cash and digital. And while I have a strong leaning towards more privacy being better, and I think it's challenging. I think in practice, like actually delivering quality software solutions that people can use for payments, for everything that relates to it, the actual privacy elements become very, very difficult to achieve, just based on how digital software works and the internet and communications. Having said that, I do think some of the policies around that, I mean, depending on which country you're talking to, do need revisiting a little bit, and I think can be refined. In terms of the actual, how I'd want it to see implemented, I really want to see the tech just be phenomenal. I think that is such a critical component. Really, really performant and well-documented tech that's very accessible, something that businesses can get using very, very quickly. And I think that is probably one of the more challenging things to really, really do to an exceptional high level, but also something that have one of the biggest impacts in terms of a nation's productivity, let's say.
I think it's a very interesting question, actually, because there are kind of two ways you can approach this. If you were to start afresh now, we wouldn't have the system we have. We wouldn't have the system where banks do so many things. They run payments, they run deposits, they run lending, they run the sovereign value transfer between countries. You just wouldn't set it up like this. You may not even start with coins and cash either. We may never have that if we could just press a button and start afresh from now. So the things you want to preserve are the sovereign issuer's ability to make sure money works for people. So to step in when there's a crisis, to make sure that money can maintain its value, that this tool that we rely on continues. They're the things you want to maintain. I would agree with James, actually. The other guiding principle would be make the technology as both robust as possible, but as open as possible. You're not going to have central banks issuing CBDCs on open permissionless blockchains on day one, but there's no reason to think why you might not get there at some point in the future. If the right governance controls are in place and if the smart contracts can deliver the sorts of governance that central banks are looking for, we could get there. So that's the other guiding principle I would have. The difficulty now is you can't press a button and change everything. So it's the transition we're talking about. Kumar was talking about the role of the banks in this phase, and that's important as well. So you'd want to design something that made sure that the transition was non-disruptive, but these opportunities that this technology presents becomes available to people.
Right, and did anyone have anything to add from that discussion?
Yeah, so we're talking about retail CBDCs. There's this other aspect called wholesale CBDCs. This is already in play right now. I run a company called Intrasettle. We're working on wholesale CBDCs. So what we're doing is, in line with the G20's central bankers, they have put out a problem statement to solve cross-border payments using central bank digital currency. Just to give you an insight, so we pay close to about $120 billion just on transaction fee on cross-border payments using the current existing system. This doesn't include foreign exchange. This doesn't include the liquidity provisions the central banks have to make. Just by moving to a central bank digital currency, a multilateral central bank digital currency, the potential is we could bring down the cost of transfer to $20 billion. That's 80% reduction in cost by moving from wholesale central bank digital currency to a tokenized cash where the settlement risk is reduced and there's no settlement risk happening there. This will bring down the cost of remittance to African countries. It will bring down the cost of remittance to Asian nations. So that's a huge use case right there, which the G20 is already working on. This year they have the tech sprint, and the key problem statement the central bankers have agreed on is how do we collectively bring central bankers together in a single platform where this could be enabled. So there are easy wins in terms of when we say central bank digital currencies. This could be one, and once we see the use case in terms of having tokenized cash and reducing the settlement risk, and being able to bring in liquidity wherever needed as quickly as possible, then we can see how we can move that towards a retail central bank digital currency as well.
Yeah, it's important to remember those two concepts, which can be the same and they can be quite separate as well. Now, I do have to go there and talk about CBDCs as the financial bogeyman, and because I know that's coming from a lot of individuals. They see CBDCs are the enemy of privacy. It means that governments will completely control your spending, your access to your money, which to an extent they already do, but they think that CBDCs would just cement that as well. And it's not just coming from dark corners of the internet or certain groups. I think there are some US states who have already legislated to bring in an anti-CBDC law, like in Florida was one of them. I think perhaps Montana or South Dakota was another one. It escapes me right now. But do they have a point? And is there a way we could allay those fears, perhaps with using an open blockchain, a public blockchain that can have the rules embedded and transparent? I mean, there's not just one question there. I think there's probably many.
Yeah, so there's a few angles to tackle there, or a few points, but I do think so. Blockchain, I think, is a really important component of the next generation of financial infrastructure. I think a big part of that is trust and transparency. So if you're a government agency and you're doing the right thing, everyone can see that you're doing the right thing. It builds, takes those walls down and makes everyone feel like they're on the same page and the perceptions are aligned with the reality. There's a lot of other things to be said about that. But in general, I think the privacy concerns or the sort of Orwellian control over monetary freedom it comes down to policy. It is not a tech question at all. How do government agencies behave? What can they request of companies, right? Because there's nothing stopping them now going to banks and going to fintechs and stuff like that and requesting data in sort of dark of night type things without disclosing it. Those things do happen, and we've seen a lot of events over the last few years where questionable behavior has happened with respect to data. So I think it's always a concern. However, I think it's really a political, policy level question. I'm certainly in favor of privacy and sensible controls and not concentrating power where it can be captured. But it really just is not a technical question in my view, other than the fact that I think you can create more transparency and more trust using a blockchain-like approach.
Quite probably, yes. Chris, sorry, Kuma, Chris?
On you first.
Yep. See, if it's a public good, I think there should be public accountability. I'm of the opinion we should be having these discussions and there should be public accountability. The regulators are demanding embedded supervision from fintechs like us, for them to have the data and analyze it. And as a public good, we should look for public accountability. And that's where technology plays a role in terms of public blockchains. We would know how much, there should be an ability for us to know, okay, how much cash has been issued, and if it's that been backed, and are they issuing more cash? Yes, I'm in favor of public accountability.
I think this discussion has come up in the context of quite a highly charged geopolitical situation, and China launching the EU-yuan is not insignificant here. And China's motivations for doing so and the way in which that particular digital currency is run and managed by the People's Bank of China rightly comes under a lot of scrutiny. I mean, I would agree with what both my colleagues said here. We don't have as much privacy and control as we think we have today. In this country, 90% of non-illicit cash transactions are recorded on CCTV. You don't have privacy when you're using cash in this country. You think you do, but you don't. Also, the cash in your wallet, the government, it's very common in some countries to simply cancel the highest denomination note. You've got until the end of the month to cash that in. The cash doesn't hold its value in the way that people think it does, which is totally in your control. Similarly with bank account payments, again, the government can freeze, can do all those things if they want to. It's the policy robustness that we're looking for. And this I do see as an opportunity to make sure there is that democratic control, which I think is perhaps lacking a bit now. I'm not comfortable with big tech having all of that oversight and control. I'm more comfortable with democratic accountability for that. But we need to be very vigilant because it can go wrong if actors have the wrong motivations. But I think people are slightly sleepwalking in the current state when they talk about some of these threats, if they really see what's there right now.
Absolutely, yes. Now we are beginning to run out of time here, so I'll let you have some last words on the issue if you have any. All of these guys here are extremely learned on the topic of CBDCs and any kind of digital assets. So I do urge you to look up their companies and find out more about what they're doing, the work they've been doing. Did you have any last thoughts?
I'll just say I'm actually very excited despite all the potential risks. I think we're in for a lovely 10 years of innovation, a lot of exciting innovation in fintech that probably may even eclipse in magnitude the last 20 years type thing. So,
excellent.
I think we should create more awareness. We should have more discussions like this. The public needs to be aware of CBDCs, especially retail CBDCs, before we launch something.
Agreed, yes.
And I would say don't concentrate on the technology, concentrate on the before and after nature of the use cases.
Absolutely, yes. All right, well, I want to thank the panel for coming together and giving us those fantastic insights. I actually learned a lot from that I didn't know before. Thank you.
ESV is more than another chaotic commodity craze. ESV blockchain can do more than just be a crypto investment. It can help you. Get more out of your games. Share more of your art. BSV makes more things possible.